Well, it's a great power to be able to print the world's currency, but it just happens like the British pound happened, and it happens like the Dutch guilder happened. And as you point out, if you have a debt in a currency that you don't print, you have a short position. And so that's what, money and credit is not a fixed supply. It just kind of contracts. You get a debt contraction. And so if you look at what happened in April 8th and 9th, where the government, the central government and the central bank got together and did that, that happened very quick. And so you hardly noticed the short squeeze. If you go to the time before that, so that took barely days, maybe a couple of weeks. If you go to 2008, that took nearly a year, but it was the same thing. And if you go to 71, it was the devaluation. And if you go to March 5th, 1933, it was the same thing, but that took place, it was 1929, and it took until 33, and you have a depression. So if you don't do this, you have a depression. That's why the depression lasted, 1920, it was 30 and through 33, the beginning of 33, you have the depression. And then 2008 was much shorter, and this one was a nanosecond and much bigger. And so it creates that short squeeze. There is a supply demand for these bonds now. So it's important to understand that. So now the world, because the dollar is a world's reserve currency, the world is long a lot of dollars or dollar denominated assets or dollar denominated debt, let's say. There's about $23 trillion of dollar denominated debt that they're holding. The holders of that are holding, like they can convert that and so on. And there's a supply demand problem, because if you have a deficit, that means you have to sell bonds. And so that means that the holdings of those bondholders have got to increase. They're overweighted in debt, in dollar denominated debt. It doesn't pay much. I mean, it's negative real returns. And you've got to buy a whole lot more of those bonds. And they don't want to buy a whole lot more of those bonds for various reasons. And then you also have China as a more effective competitor for capital. So because what's happening is it's a competitor, and it's not just a competitor, let's say military, it's a capital markets competitor, the companies it's producing and so on. In 2015, only 2% of Chinese markets were open for foreigners. Now it's over 60%. And if you look at the relative pricing and so on, it's a whole different story, because they're not doing quantitative easing. They're not doing whatever it is. They still have an attractive bond market. They have attractive capital markets that are more open. And as they're more open, and big investors, institutional investors, central banks and so on, view themselves as underweighted there. Even if you want balance, you want balance. You're getting the supply demand for these US bonds coming, and you want to move that. That creates a supply demand problem that then can only be manifest in resolution by either the US raising interest rates to attract that, or the dollar devaluing. Okay, so now we're dealing with that dynamic. So this is very similar when we went from, the 1970s, early 70s, late 60s to 1970, we had a recession. And then there was a difference between what was then the Deutsche Mark and the yen, and how much they were printing, and how much the United States was printing. And that was the problem. So you have a difference in monetary policy, supply demand, that is working on that. So when you bring up China, it's not just a geopolitical and not just a technology, or, it's a capital competitiveness thing. That means that when you buy a Chinese financial asset, like buying an American financial asset, you have to buy their currency. So it's supportive to their currency, and it's also supportive to their assets. And then in addition, part of this cycle has always been that if you're trading, if you're a large percentage of world trade, China now is the highest percentage of world trade, then there's the capacity to bill in your currency or lend in your currency. China has been very reticent to do that, not to disrupt the system and so on, but you're seeing more the internationalization of the renminbi. So it has appeal for borrowers and lenders and so on. And so that dynamic is really following the same arc of monetary systems and empires pattern.